Hello, everybody. This is the continuation of the export promotion assistance in the export management. Subtopics in this session are income tax concession, excise exemption facilities, bilateral agreements, and export promotion council. Learning objectives: students will be able to examine specific schemes and to analyze various incentives to promote export. Session outcome: this session enables us to know about the various monetary and economic concessions and exemptions given for promoting export business. We'll study about the income tax concession. Section 2, subsection 5 of the Finance number 2 Act 1962 provides for a tax concession in the case of profits derived from the export of goods or merchandise out of India. This tax concession will be admissible in the case of all SSCs except companies which have not made the prescribed arrangements for the declaration and payment of dividends within India. Income tax concession has been given in the form of a rebate of tax which will be equal to the income tax and super tax calculated respectively at one tenth of the average rate of income tax and the average rate of super tax on the amount of export profits included in the total income. If the export profits are set off against any losses in the process of computing the total income, no tax concession will be available. Excise exemption facilities. It is the tax on production or manufacturing of goods. It is the duty levied on the production of goods and the liability of payment of excise duty arises immediately upon manufacture of goods. Excise duty is governed by the provisions of the Central Excise Act. The manufacturer whose unit falls under the purview of excise needs to register it with the excise office. The unit, once registered, needs to maintain records of production and removal of goods as per the requirements of the excise rules. Exports in India are exempt from the payment of excise duties based on the internationally practiced trend of keeping exports free from the burden of indirect taxation. It has to follow a set of procedures for availing excise clearance. Next one is bilateral agreements. A bilateral agreement is a broad term used simply to cover agreements between two parties for international treaties. They are range from legal obligations to non-binding agreements of principle. It is also called a clearing trade or side deal. It refers to an agreement between parties or states that aims to keep trade deficits to a minimum. It varies depending on the type of agreement, scope, and the countries that are involved in the agreement. The agreement also creates an environment that promotes fairness since a set of rules in business operations is observed. Here are the five areas covered by bilateral agreements. Within with the elimination of tariffs and trade related taxes, companies located in countries with a bilateral agreement enjoy a price advantage because of standardized business operations such as labor standards and environmental protection. Exporters operate in a level playing field. The agreement involves not stealing the innovative goods of other exporters. Countries adhere to existing copyright and intellectual property laws. The countries will not use unfair subsidies. Countries involved in the agreement will not offer products at a cost only to gain a bigger share in the market. They will not offer goods at prices that are even lower than production costs. Then increase prices when they have overcome the competition. Advantages of bilateral agreements. It gives companies access to new markets. When the parties involved see demand, they will open more job opportunities. Disadvantages. The elimination of trade taxes means companies lost their price advantage. A bilateral agreement can result in competing agreements between other countries. Export Promotion Council. Export promotion councils are government initiated authorities that promote and support export firms in developing their overseas trade and presence by providing technical and industry insights. Export promotion councils also promote government schemes, act as a data store, and conduct overseas tours and studies. Export Promotion Council functions and benefits. On being admitted, the member is granted registration cum membership certificate of the Export Promotion Council concerned for availing export import advantages or concessions in foreign trade policy. To meet prospective buyers by participating in events conducted by export promotion councils. Documents required for registration. First one, digital signature certificate, copy of IEC code certificate, a certificate from a chartered accountant certifying the export turnover figure, list of partners, directors with residential address, MSME registration certificate, that is medium and small industries or entrepreneurs if available.